Good day, ladies and gentlemen, and welcome to the show on this Wednesday, the 27th of July, 2022. Thank you for tuning in. I'm glad to have you guys here. Now, I'm going to get right started this morning, and I think I'm going to open up the charts right here. Take a look at what's going on. Economist Rubini, severe recession, financial crisis is coming. He's talking about a stagflationary debt crisis, combining the worst of the 1970s and 2008 together. But it also goes on to talk about here. The first thing it says is, it's difficult to know when inflation will peak, when it will fall in earnest, and thus how far the Federal Reserve will ultimately lift rates. And I know a lot of people out there saying, hey, you know what? Inflation peaking? No, inflation's not going to peak. It's going to continue right on to go higher and higher and higher. And that's the argument they make. But in fact, what we're experiencing, or very close to experiencing now, is something called disinflation, where the amount of withdrawing liquidity that they're doing from the upper echelons of the financial system trickles down to the lower end of the financial system, starts to put us into a recession. People start to not spend as much as they were. Spending decreases, and in fact, you get prices will actually start to peak or move toward a peaking, and inflation, consumer price index will slow down its forward ascent, like it's been going right on up, like 6, 7, 8, 9%, just going up, where that slows down the upward pressure on the consumer price index. It's called disinflation. But they're also, at the same time, they're reaching out to the end of how far they can go with all this without causing a recession to turn into a depression and have a major stock market crash. I mean, a stock market crash that might parallel something that we haven't seen since, at the very least, 2008. And I don't think they want that. So this is a delicate balance, and this is why it says here, it's difficult to know when inflation will peak and when it'll fall in earnest, and thus how far the Federal Reserve will ultimately lift rates. It's murky water. I think they say here it's murky water. Hard to predict what's going to happen next in this kind of environment right here, and there's a reason for that. The reason being, the Federal Reserve, what they do, has a direct impact on which way this thing's going to turn. Because ultimately you have to understand they control the markets. And if they want to really, in earnest, move into this quantitative tightening and really raise interest rates up and everything, and say they stop messing around with the long end of the yield curve and stuff, we would have a massive crash. And if they didn't step in to stop that massive crash, it could turn into the worst deflationary event we've ever seen in our lives. But on the other side of that coin, if the Fed decides that, hey, you know what, we're going to support markets, we're going to be very accommodative, we're going to end all of this quantitative tightening, we're going to go back to quantitative easing, we're going to control the long end of the yield curve through yield curve control, we're going to start new programs to support the new social programs like universal basic income, and on and on and on. They could go on with a lot of things that they could do under modern monetary theory. Well, then in that case, they'd turn us right in the opposite direction, and we'd go into hyperinflation rather rapidly. So it's all dependent on them. And this is why it's a little bit hard for a person that's trying to forecast these markets right now, is because the Fed is kind of up in the air. They're trapped right now. And because they're trapped, they're kind of like a rat that's in a cage and he's running back and forth. And you just don't know which way he's going to go. You know, and I mean, that's the way it is. Let's take a look at silver price today. Silver is bouncing around. It's 1864 right now. It's up 3 cents. Well, no, it's flat with the board right now. 1861. Take a look at gold today. And we're looking at 1717 for gold. Let's take a look at cryptocurrencies today. 990 billion for Bitcoin. And we're looking at a Bitcoin price of 21,439 on the day so far. So cryptocurrency is starting to stabilize a little bit in just above $20,000 for Bitcoin. The gold and silver price seem to have stabilized at these bottoms they're in right now. And like I say, we're in a little murky period here where it's hard to predict which direction things are going to go because it's all depending on what the Fed does. I hate it that one single entity out there has that much power over markets. I mean, it's almost like they have a monopoly of control over the financial system. And myself, I think that this is perverse to have it entirely controlled by one entity. Actually, the whole world. You know, it just seems to me that that we should have a system in place where currencies of the world will retain their value because they're backed by something of hard value behind them that gives the currency value, rather than just being able to control the currencies through these central banks the way they have it now. It's just the whole structure of it is not right. Anyway, Dow Jones Industrial Average today is up 152 points at 31,914. We're going to take a look at crude oil now at 95.49. It's up 51 cents on the day. So crude oil's riding high. Move index today. We're looking at all year. It's been very slowly going up. We're at 128.55 right now, and it hasn't left this steady, slow march upwards. It's been very steady on that path, which saw it from 51 points on September 10th, 2021. That's about where it started to go up. And it's been on this slow inclination upwards all ever since. I mean, it peaked a couple times, up around 156. But we're going to definitely probably exceed these peaks at some particular point. And you say, well, what does this mean? What is the move index? This is your volatility in your credit markets. This index moves the Fed. The Fed moves on this index. I mean, they don't move on a lot of other things. Your charts and stuff you look at will not make the Fed move. They won't do anything. But this index right here, if it shoots too high, too fast, you'll see the Fed do something. They'll start some new program or something to distribute money into the system. And this is the index that makes them move. This is the move index that makes the Fed move. Anyway, bonds and rates today. That's not why they call it the move index, by the way. But it does make the Fed move. Okay, U.S. 10-year today, 2.76. It's down 2 basis points. And we're looking at 1 basis point down on the U.S. 30-year. We've been watching this index. And we've been watching massive moves to the downside in the U.S. 10-year over the last few weeks. I'm saying to myself, hey, you know what? More than likely some sort of manipulation of the long end of the yield curve by an entity out there that has such deep pockets that they can afford to do whatever they want. Dow Jones, the U.S. dollar index 107.25 was kept the dollar nice and high. Look how high that dollar is, 107.25. Thank you guys for listening to my show this morning. Like and subscribe, and now for pets. And we'll catch you guys in the very next episode. Bye-bye. Hello, folks. Welcome back to the pets. Now, let's get started. Let's take a look, and let's turn on the, I'm not going to call it charts, but let's turn on the camera right here and take a look at some of these pet photos. First thing we're going to take a look at is this baby bird. Now, somebody rescued this baby bird off the side of the road, put him someplace where he could be safe and grow up to be an adult bird, And so that was a very nice thing to do. And the same person rescued this lizard from a cat. The cat was mauling, I guess, or had this lizard. And so the same person rescued this particular lizard from a cat. And now what we got is the third picture. Now, I think this one's kind of cute. The photo was subtitled, he said, "I thought this was a kangaroo." Now, see, to get it, you got to kind of look at the way his rear leg is. He says, "I thought it was a kangaroo, but I live in Texas." So it's not a kangaroo, it's a dog, but the way his legs are outstretched like that, kind of looks a little bit like a kangaroo. It really does. He's got awfully big rear legs, in proportion to the size of the dog. While he's stretching out, it's hot out, Dogs do that, stretching out on that marble floor and collecting some cool from that. Kind of cute. Anyway, thank you guys for watching the show. Appreciate my audience out there, and we'll catch you guys in the next episode. Bye-bye.